Hi, welcome back. I'm Armi Desai, editor of Move Smarty, and I'm here with our lead contributor, John Pasalis of Realosophy Realty, for the second installment of our consumer Q&A show, which we're calling The Situation. The idea here is that John often gets detailed questions from consumers about their particular real estate issues, and we're going to review those questions and have the chance to ask John to unpack them and answer them for us. So you can email us your own questions at askjohn@movesmartly.com for consideration to be included in future episodes. Now let's get to our questions. Hi, John.
Hello.
So person one, we should have a better name, but a lot of people wanted to be anonymous. So let's start with person one. Hi, John. I was watching your Q&A show, and I'm hoping that you can give me some advice. We bought a smallish home close to the downtown core in Toronto in early 2017 for just over $700,000. Shortly after buying the home, we moved in with an elderly parent to assist with her care. We couldn't leave our own home empty, so we rented it out. We have fantastic tenants who have been renting from us over the past few years. Unfortunately, we believe these tenants may move out within the year. The problem is that I really don't want to move back into our home, which would be too small for our family. We currently owe about $350,000 on our current property. We understand that it's difficult to sell a property with a tenant in it, and we don't think that our tenant is willing to leave now so that we can sell. We met with our banker, who said that we could use our HELOC on our current home to buy another property. Without going into our savings, we could buy a new home for $1 million or less. If we dip into our savings, we could afford more. Our monthly payments would still be quite high. Let me rephrase that. Our monthly payments would be quite high, but our banker thinks that we could do it because we are good savers and we have a really good combined income. We know that it would be best if we could find a home where we could rent out a space to make some additional income. Our goal is to hold on to our current home for just a year or two and then sell. We hope that our tenant will have moved out and the market conditions for selling will have improved so that we can sell by then. Does this sound like a good plan to you? No one has a crystal ball, but do you think that things will improve in a couple of years? And if the place still has a tenant, will the place still be able to sell in an improved market? Thank you in advance for your help.
Such a great question because there's
a lot going
things.
On here.
Okay, so let me unpack a couple of things that I think are important for everyone to understand because it may not be obvious. So the first thing is what they're talking about is borrowing money. When they say borrowing against the HELOC, HELOC's a home equity line of credit. So it's basically like a secured line of credit against the home. So they're basically saying they can borrow against their existing home to use that money as the down payment on the next home they buy, right? And a max budget of say $1 million on the home, potentially more, but they might be stretched. So that's the first kind of point. The second is this issue about their current home that they own downtown being tenanted and why that's an issue. And I think it's important to understand that both from a buyer and from a seller's perspective. Tenanted homes are a lot harder to sell, and in particular in today's market. Now, I'll tell you why. Okay, they're harder to sell for a couple of reasons. Number one, you obviously cannot stage and prepare the home the way you would as a home seller. You're basically marketing it the way that the tenants live. And that's usually not the best way to market a home. I mean, when we list homes, our clients move a lot of their furniture out, we stage it, we bring in artwork, we try to present it as beautifully as possible because it does make a difference. I mean, the same home, if it's staged or not, can have a material price difference because it's emotional. People start envisioning themselves to fall in love with the home when they see it staged and designed a certain way in many cases. So you can't do that when it's tenanted. You have to photograph it the way the tenants have the place. And if they're clean and immaculate and it's, their furniture is amazing, then great, it's going to present well online. If they're not, then you're stuck presenting it in a way that doesn't look great. So that's one reason why tenanted properties are hard to sell and usually get a much lower price. The other issue more recently is, and we have to think about how things work with tenanted property. So let's just assume these people have been here for years, it sounds like. So, and right now they're not on a lease. They're basically month-to-month tenants, right? The only way really that the tenants can get kicked out is if these existing owners want to move into the home for their own use, or if a purchaser buys the home, you know, they know there are tenants in and they say, okay, I'm going to give you notice. After I take possession, I want to move in myself, right? Before COVID, that was almost never a problem. Like tenants were getting notice when a home sold, and they would immediately, you know, move out of the house on closing without issues or hiccups. Since COVID, a lot of tenants aren't doing that. And quite frankly, they're just kind of squatting and saying, forget it, I'm not moving out. And part of this is they've been emboldened with all of the delays at the landlord tenant board. They know that it's going to take, I mean, maybe a year for them to get evicted. So, you know, they'll basically just stay there. They'll probably still keep paying rent, but they basically might say, you know, we think you're giving us notice in bad faith and we refuse to move out, right? And sometimes tenants are doing this because they're realizing to get a similar home, it's going to cost them an extra $500-600 a month, and they don't want to do that. Sometimes they're doing it to effectively try to squeeze money out of the owner, effectively to get cash out of them as an incentive to move. So
the one thing, John, if you could just unpack this idea of bad faith. The issue here is that a tenant can claim that you are, you know, maybe trying to evict them so you can raise rents inappropriately, especially given now that many rents have skyrocketed across the GTA. So they go out, they look at other rentals, they realize they'll have to pay a lot more because of what's happened since they've been in the building. And if they've been under that rent control, it makes a big difference. So this is causing, particularly now, a lot of reluctance in a high rent environment.
100%. And that's basically exactly what they're protesting. They would basically be arguing that the purchasers giving them notice in bad faith. I mean, a lot of times it's hard to prove that, obviously. But still, that's what a lot of tenants are doing. You know, and from a buyer's perspective, you know, a lot of our clients, they know that, and they almost like refuse to even look at homes that are tenanted because they just want to move into a home. They don't want to have to deal with evicting a tenant for 12 months, right? And this is why it's very hard to sell tenanted properties these days, and why when they do sell, they often sell for considerably less than what they would have sold for if they were vacant. So all that said, let's kind of go back to the question. And this person's question was that their plan is to buy a home and then eventually potentially sell their current home that they own downtown when the tenant moves out, or possibly the tenant doesn't move out. Can they sell it, you know, tenanted a year or two from now in a better market? And I think there are important couple things to consider here. Number one is, I think, you know, they need to be thinking about their next home, right? And buying a home that they can live in for the next, say, 10 years. And to me, that's the most important. So originally they said, you know, maybe they could, their max budget would be $1 million, and maybe they can go a little bit more than that, but they'd be stretched. Well, the important question is, what price range are they happy with? What kind of home are they happy with? Assuming they've sold their current home downtown, right? I think that's the important thing, because you're trying to plan your life for the long term. This home downtown that needs to be sold is just one piece of the puzzle, right? The bigger piece is, where do I want to live? What neighborhood, what type of home for the next 10 years, assuming I've sold the one downtown, and what does that look like, right? And maybe that budget is even a little bit more because they have more capital from their home downtown. Maybe that's budget is 1.3 million, right? To get them that long-term home. So I think, to me, that's the most important question, to think about where you want to be in the long term, right? And then the next part of that is, how do you get there, right? So are you comfortable buying that? And it sounds like if it's over 1 mil, they may not be comfortable with that price range, you know, over the next year or two. And then the important question then becomes, well, you know, do you hold off on buying the home? Or do you prioritize selling your current home? Now, when it comes to selling the current home now, even though the tenants are still living there, you know, one thing that we do with our landlord clients is negotiate, what's called in kind of the industry is cash for keys. And it's basically you're negotiating to terminate the tenancy between, the owner and the tenant. And you're basically saying, listen, if, you agree to move out by this date, the landlord will give the tenant 1, 2, whatever it is, maybe 3 months rent if they're lucky, to basically vacate the property. Like they agree to vacate it. And the tenant may be willing to do that if they plan to move out in the future anyways. So that is an option that you can try now if this person's more comfortable selling, having the money and buying kind of their more dream home and dream budget today and not waiting. That might be one option that we can do. And we've done that with tenants. When we sold properties over the past 2 years that were tenanted, a lot of times we did those negotiations between our landlord clients and the tenants. And sometimes it is complicated, especially if their relationship isn't good, which is why we have to step in the middle and mediate. But that's one way of doing it, I think. And, I think the important thing is the question and they might have is, well, why sell in this environment that is slower? Well, listen, the market downtown is relatively busy. Prices did not surge as much as they did in the suburbs. And the market, right now downtown especially is relatively stable. And even if you are selling in a slower market, if you get that money and you get that capital, it allows you to buy your dream home in what is also a slower market. It's a bit of a wash, right? Now, if you want to buy in a slower market today and hold on to that home as an investment and stretch your budget and, try to make it work, that's an investment decision. It's a little bit different, right? Like you are basically hoping that prices rise downtown, which they might. We don't know when. That's the reality. I don't think we're going to see any rapid price growth for the next 12 to 24 months, because I think rates will be high for at least, the next year and a half or 2 years. So those are the options. And then I think her last question was, do we, is it going to be easier to sell tenanted in a busier market? And my answer to that would be no. Like either way, you want it vacant, like even in a slow market, even in a busier market, if the tenant is still there, if you end up buying today, for example, and your plan is to just sell over the next year and a half, well, if they don't move out over the next year and a half willingly, then you would still want to negotiate a termination with them at that time so that you could clean it, paint it, stage it, and sell it properly to maximize your return, because you definitely get that money back.
Let's move on to our second question. Person number 2. Hi, I've saved up some money and I'm looking at making a real estate investment. I'm considering buying a pre-construction condominium in Hamilton because the prices are a lot lower than in Toronto. And the building I'm considering has a good deposit schedule and good buyer incentives. Also, because I would only need to get my mortgage when the building is completed in about 4 years, I wouldn't have to worry about today's higher interest rates, as they will likely have fallen by the time the building is done. And I would not have to worry about getting and managing a tenant for this same period. So what do you think? Again, John, there's a lot going on here. It seems like there's a lot of considerations. First of all, can you maybe unpack for us what makes for a good deposit schedule from a buyer's perspective?
So a good deposit schedule is one where your payments are as low as possible and stretched out over as long a period as possible. Because if you think about the way investors like to invest, they like to invest with leverage, and leverage is having as little of your own money in as possible. So for example, if all you have to put down is 5% in the first year and then the balance over the next couple of years, that's a great scenario, because in the investor's mind, if that property is appreciating, well, the value of the property is appreciating based on the purchase price. Well, they've only put down a minimal down payment of 5%. So the leverage is greater. And that's what investors are like when they're buying condominiums. Lowest deposit possible and stretched out over as long a period of time as possible.
All right. So going back to the details of the question, what do you think about this? It seems like an assumption on the buyer's part that things will be different in 4 years' time when they have to lock in their mortgage. And that's always that's a pre-construction hope, isn't it? It's something that attracts a lot of people to pre-construction.
Yeah, 100%. It's actually quite funny because I met with 2 other investors a little while ago who are actually in a very similar position. So And in their, I mean, I don't know the price range that this person's looking in, but in the case that I was speaking with someone, I believe they told me that they were looking at buying pre-construction condos in Hamilton at $1,100 a square foot. Okay. Which to them looks attractive because if you look downtown pre-construction maybe are $1,600-$1,700 a square foot. But $1,100 per square foot for a pre-construction condominium in Hamilton today, to me, really just seems complete insanity. Like, I don't even know what to say. It is such a high price. I mean, it was funny. I was speaking with a mortgage broker in Hamilton like a few weeks ago, and we were talking about the market there and getting his feedback. And he as well, he's like, his mind was blown. He's like, I can't understand it. He's like, I can't sell existing condos at $750 a square foot, and people are rushing to buy pre-construction at $1,100 a square foot, right? And why do people rush, and why does it look more attractive to these investors? They're not investors, they're speculators, because it's low leverage for these reasons. I don't have to worry about a tenant and not paying. I don't have to worry about interest rates. I just put my money down, and the dream is in 5 years, I've made 200 grand, right? The problem is you're paying such a premium over resale. I mean, to put this into context, we just, okay, $1,100 per square foot pre-construction in Hamilton. We just sold a resale condominium pretty much at like Yonge and Bloor, like Jarvis and Bloor, for just over $1,100 a square foot right downtown. So does it seem rational to be paying the same price for a condominium in Hamilton as you can buy today, basically right at the heart of downtown Toronto? I mean, it doesn't make sense to me, right? So as an investor, you're basically hoping that not only do prices catch up, but that when it comes times to sell your unit in 4 or 5 years, you're going to be able to sell it for $1,300 a square foot, for example, in Hamilton. And these investors, I mean, it's hard to predict, but my prediction is they're going to get hammered, because we're already seeing this in the low rise market. I think we talked about it maybe in our roundtable about a lot of these investors who bought homes in the suburbs a year and a half ago for 1.8 million, and now they're worth 1.3 and they can't get a mortgage. And that's very likely going to happen. Now, in this case, it's because the resale market declined, meaning the price of existing homes declined, which means when it came time to take possession, you know, their home wasn't worth what they paid for it because prices have fallen. But the point is that we don't even need condo prices to fall, even if they only inch up gradually. By the time these pre-construction condo units are done, they're not going to be worth what those people paid for them, because resale condominiums are going to be worth 30 to 40% less, right? So you don't even need low-rise condo price to fall. You just need them to not increase very much, which is a very likely outcome over the next 2-3 years with rates this high. So I think it's a highly, highly risky move to be buying pre-construction in today's market. And you know what? If you want to risk it, all the power to you. But you know, there's a good chance you're going to be like a lot of these people who were on the news protesting because they're going to lose their life savings, because they don't realize if you pay $1 million for a condo and when you go to get your keys, it's only worth 700 grand. The bank's going to give you the mortgage on 700, and you have to come with 300 grand in cash to cover the difference. And if you don't, they'll sue you. Yeah, and the builder has every right to sue you to get that difference.
I've seen you say this elsewhere. People have to remember that they are buying a contract. So you are contracted to buy at that 1 million. And even if you can only get financing for 700,000, that very much becomes your problem. You could be liable to lose all of your deposit money and be sued. So these are some very real risks. I do invite viewers, if you're interested, our monthly roundtable also has a segment on the risk of pre-construction condos. So you can find it there. All right. I think that was frank advice, John. Let's move on to person number 3. Hi, my wife and I are actively looking at buying a home in Hamilton, and we just had a weird experience with agents and are trying to make sense of it. We looked at a home that was listed for sale for $699,000, and just after it came onto the market. We really loved it and asked our agent to prepare an offer for us, and she suggested that we should try offering $680,000, about $20,000 under asking. After we made our offer, the sellers rejected it, and the seller's agent told our agent that the sellers were expecting a higher price. The next day, we made an offer for the list price or the asking price, but once again, the seller rejected our offer and said they were hoping for more, which we found crazy because we offered their asking price. Then the next day, we were disappointed to hear from our agent that the home sold for $735,000. So that's $35,000 over asking. What happened here? Did our agent screw up, or did the seller act unethically or unprofessionally?
Wow, these are amazing questions. And I feel so,
Yeah.
I feel for people navigating this market because there are so many different things that could be going on with this scenario.
Yeah, it seems like there's two questions that often come up here. One is, does the seller have an obligation to accept a list price or an asking price? Why ask for that if you don't really intend to accept? And the other issue is, should these buyers have been informed that another offer had come along?
That's a good, those are very good questions. So let's answer your first two questions before we unpack what happened. Number one, the seller is not obligated to take any offer, even if it's asking price or their list price or over their list price. Doesn't matter. They have zero obligation to accept anyone's offer, is the first thing. The second comment is, did they have an obligation to notify these buyers that they got a second offer? And the answer is, if those buyers' offer expired or was rejected, which is what it sounds like, then they have no obligation to. I mean, there's a professional etiquette. Usually an agent would, if they know that there's another party, because they would try to get effectively a second offer to, to represent their seller's interests. They usually would, but there isn't an obligation to do it. And I'll explain maybe why, under what circumstances they wouldn't, as we kind of unpack this kind of scenario. So, I mean, there are a few things that could have possibly be going on in this case. So the home's listed for $699. The first and most important thing that you need to do before making an offer is getting your agents to tell you realistically what a reasonable value range is, okay? So when the question is, well, what should we offer? The answer is not, let's offer 680 because they're listed at 699. That's not the right answer. The right answer is, let's look at recent sales. And when I say recent, I mean very recent, not from May when the market was hotter, like over the past few months. What has sold? What is this home worth based on what has sold recently? And arguably, this is the most important bit of information, right? Because if their agent told them the home was worth 700, or maybe even worth 710 or 720, okay, they would not have gone in at 680. They just would have offered the asking price from day one, right? So knowing what the home is worth is the first step and the most critical one, because it influences the buyer's offer. And sometimes we have even our own clients, our own buyers, who want to pay more than what it's worth because they really love it and they want to end their home search and they want to, get this particular home, and that's all the power to them. But they need to know what is selling and what a reasonable range is, right? So that was missed. So we don't even know what the home was worth realistically. On the flip side, sometimes sellers or sellers agents will list the home, say at 6. And what's weird about this is, usually if as a seller, you're expecting more than asking, you would normally have an offer date, right? Like that's usually the process. I list for $699. This week, I say, okay, next week, we're going to review offers. I'm hoping for more than the asking. It doesn't sound like this home had an offer date, right? It was just taking offers anytime. And what makes that odd is, and it does happen sometimes, where agents will list for, say, $699, but they're really expecting $750. Like it's just such a stupid strategy as a seller and a seller's agent, and have offers anytime. It is such a bad strategy. We do see it in Toronto sometimes. And, I think it would have been important to get that information from the listing agent if that wasn't indeed their expectations, and if the home is worth 720 or 730, that's one thing. If it's not and they're unrealistic is another thing, right? So again, in this situation, we don't know what the value is and what a realistic price is. So it's hard to say exactly what was motivating the seller with that approach. Now, let's just say the home was worth $699, right? Well, as a seller's agent, if we have another buyer who's like, if we get an offer today for $699, if I was the seller's agent on this home, and I think the home is worth $699, but I have another phone call from another agent says, listen, my client's desperate. They love it. They can't make the offer tonight, but we're going to give you over asking tomorrow. Well, I'm not going to rush and accept that person's offer, the one that we got for $699, right? I'm just going to wait. I'm going to say, listen, let's, we're going to hit pause and play dumb. I wouldn't, you didn't say that we have another offer coming in, but just wait for that other offer to come in. And if that other offer came in at $735, no conditions, which is what it sounded like if they found out they got the price the next day, and a bank draft for the deposit, well, and a short timeline to accept, well, we don't necessarily always have the ability to kind of give that other buyer a heads up that we got this offer. If we only get an hour to accept it and it's an amazing price, more than market value, we're just going to accept it, right? And that's possibly what happened in this situation.
And to be clear, John, if the other offer was still active and another offer came in and was registered, so formally made, under that situation, would there be an obligation to get back to that buyer?
Yeah. So for example, if we go back to this example, if they made their offers for $699 and then the same night they got another offer in at that higher price,
while the first offer was still active, meaning
while the first one was still valid and active,
yes,
they would have had an obligation to tell that buyer that another offer came in, so that buyer has the opportunity to make any changes, because they made their first offer assuming they're not competing with anybody.
Right. It's just after that offer expires, the first buyer, in this case, I believe it was a day later, so it's safe to assume it had another offer came in. That offer, the seller and their agent are not under any obligation to disclose to the first buyer. Yeah. Right.
Exactly.
Now,
and
normally do agents reach out, seller agents, and just keep everyone informed?
Yeah, usually they would. And again, we don't know the details here, but if we were their buyer's agent in this situation, the most important thing is, and in all negotiations I find is, and it's remarkable how many agents don't do this, is just pick up the phone. It's like people are like afraid to call people. They want to text, they want to email, and you do not get the same information over email and text. Sometimes the listing agent just doesn't want to say certain things via email or via text that are written. So what do I mean? Well, we call up the listing agent and say, why the heck are you rejecting my offer? It's list. Having a frank discussion. And a lot of times the listing agent will tell you what's going on. They might say, my clients are unrealistic, they're crazy. Or they might say, I'm expecting another offer to come in, right? And in those situations, we have more information. Whether our buyer clients want to believe it or if they think the seller's bluffing is up to them, right? But usually I find like the agents in those discussions are very frank because they want to sell the home. They're being upfront with you. Like they don't need to lie, and you know what I mean? Like usually they're being very honest. When it comes to sort of these details, if they tell you on the phone, I'm waiting for another offer, they told me it's going to be better, that's why we rejected yours, 9 times out of 10, they're being very frank with you, right? Especially if we're the ones that are calling, right? Because we are going out of way. It's not like they're calling us to try to squeeze more money out of us. So it's very important to pick up the phone and call and have discussions, because that's the difference between sometimes, getting the home and not, I find.
Yeah. And that's an important, given that society seems to have developed a fear of phoning. If we, the news articles say we are all preferring to text and for some reason are avoiding that conversation. So very important to see that your agent is able to do that kind of thing.
Yeah, 100%.
All right, let's move on to our final question then. Person 4. Hi, I'm thinking about my upcoming mortgage renewal in 2024. Because I'm on a fixed payment schedule, I'm expecting that the bank will ask for a lump sum payment in order to keep amortization at 30 years. I'm going to actually break here, John. Let's pause first. Can you unpack first why borrowers with fixed payments are now running into this question upon renewal because it's due to the very specific situation we have where we're experiencing a very high rapid increase in interest rates.
Yeah, exactly. So what's happening with a lot of people that are on variable rate mortgage, but with fixed payments, is as interest rates have gone up, their payment has stayed static. And many of them now have hit what's called the trigger rate. And the trigger rate is the rate at which you're no longer even covering the interest or all of the interest on your payment. So at that point, your payments usually need to increase a little bit. But for most of those people, in a lot of cases, their mortgage payment now effectively is only covering the interest. They are not paying anything down towards the principal, right? Which effectively extends their amortization out considerably, right? They were on before, say, like a 30-year amortization schedule to have their mortgage paid off in 30 years. But given the fact that they're not paying anything towards principal and that rates are a lot higher, their amortization rate gets effectively spread out over a much longer period of time, which can impact them when it comes time to renew.
Right. Now let's return to the question. So what if I can't come up with this lump sum payment and therefore cannot review because Canada has a maximum amortization period of 30 years at present? Even if I keep making my current mortgage payments, does the bank have the right to force me to sell my house?
So let's go through a couple things here, and I think the question I think is missing one thing that's important. So if someone signed up for a 30-year mortgage a few years ago, right? Let's just say 3 years ago, and they're renewing in 2 years from now. Well, technically, at that time, they need to renew their mortgage not at 30 years, at their 25-year, right? And they need to keep the same sort of amortization schedule. But on top of that, what he's suggesting is, or she's suggesting, is that the bank might expect them or want them to make a lump sum payment to take into account that they hadn't contributed to their principal over the past 5 years, right? Now, the other challenge is that even, if they stick with that amortization schedule when they can, their payments will be a lot higher. So what a lot of people are trying to do now is extend their amortization longer. So instead of renewing at 25 years, which is what they were supposed to do, is extend longer over 30 years. And in some cases, in some borrowers, even extending it out to over 40 years, right? And this is designed to lower the payment shock. Now, the challenge is that any time you change the terms of your mortgage, right? Like in changing the amortization period is technically one example of that. You need to requalify under the current stress test, right? Now, all insured mortgages, so that's mortgages generally with less than 20% down, CMHC and the other private mortgage insurers have come out and basically said that they're being very flexible with borrowers, working with them to soften this payment shock, extending amortizations to 40 years. This is not for purchase, this is for renewals, to soften that payment increase. We have not heard any similar type policies for uninsured mortgages. So that's people with more than 20% down. OSFI just, which is the banking regulator, just kind of announced what they're doing with the stress test. And effectively, they're not making any changes to it, but they might look at perhaps some policy changes in the new year. But again, with respect to whether the bank can force them to sell or not, the bank can just potentially just not renew your mortgage, at which point a borrower would have to look potentially for an alternative lender or a second lender that might refinance their mortgage, perhaps at a higher interest rate, for a year or two. And this is why people go to these secondary lenders, right? When the banks are a little bit too strict, but maybe this person has a ton of capital and equity in their home, and a secondary lender will say, okay, fine, your income isn't high enough, but you have like 40% equity in your home, right? So they might be willing to refinance. And a lot of times people will go to a secondary lender as like a 1 or 2 year solution until things improve, and then they go back to a big bank, right? So, those are the options or the scenarios people might find themselves in. Like as a worst case, you might have to sell your home. If you cannot get a mortgage from any other lender and your existing lender will not renew you, well, then, yeah, you might be in a position where you'll have to sell your home because you cannot renew your mortgage. But again, I think these are extreme cases. Lenders, banks, right? No one wants someone's home, right? Like everyone wants to keep people in their homes. They want to help manage this payment shock, on caused by interest rates. So, the key thing is usually you want to be proactive and you want to talk to your lender. Don't wait till, your mortgage is coming up for renewal. You should be having these discussions at least 6 months ahead of time so you can start planning.
Great. So it seems like two key things here. One is talk to your bank. Again, pick up that phone, let them know what your concerns are, see if there's any scope for any sort of arrangement to be made regarding amortization or other considerations. And the second thing, John, is if you do find that your own bank or the current holder of your mortgage is not providing you with all the solutions you might need, do you then contact an independent mortgage broker to get access to other forms of lending, or other providers of lending?
See, that's actually it's a good question. And it actually might not be possible. Okay, I don't want to say it might not be possible. It can be harder because, again, as you start going out to other lenders, you have to effectively qualify under the stress test, especially if you're going to other banks, right? So if you're already at a big bank, usually your best bet, I believe, and again, I'd have to talk to mortgage, but I'd be pretty confident to try to work with your existing lender, right? If they can't do it, if they can't make it work, then yes, potentially contacting a mortgage broker. And I think at that point, they would most likely be looking at alternative lenders, not another big 5 bank, right? Or big 6 bank. So yes, try to negotiate with your existing lender. And if that doesn't work, then yes, working with an independent mortgage broker, because independent mortgage brokers are the ones that are going to be able to help you connect with, some of these secondary lenders.
Right. And then the third point is be very frank. If you do find that you can't get a mortgage elsewhere and you are faced with higher payments you might not be able to make, then you want to be proactive about maybe downsizing yourself and not getting into a situation where you really fall behind. And that when you really fall behind on your payments is perhaps the only situation where a bank, eventually will step in. But it seems like this viewer has scope to some options before then, including selling on their own terms.
Yeah, you definitely do not want to be in a situation where you're going to the bank once you're behind on your mortgage or can't make your people are waiting too long. And maybe we're going to do some videos on how to manage these kind of stressful periods financially for a lot of people, because I think a lot of people are doing that. They're kind of ignoring the problem. They're sweeping under the mat, hoping it goes away. And then the problems just keep building and they get to the point where they're forced to sell because they haven't come up with an alternative plan, because they've kind of been ignoring kind of the big issue that's right in front of them.
Yeah, unfortunately, I think so many of us do that, in the face of really big difficulties. There is a tendency to hope or wishful thinking that things will somehow be better and later and it'll magically fix itself. But what you're really pointing out is no, really take stock and start to take action right now. And by all means, pick up the phone. Don't just give into that fear of phoning. Okay, so I think that's it for our session today. Thanks, John. A really good detailed look at some issues. Again, you can see our show notes for how to contact us if you have situations that you'd like to discuss in future installments. And otherwise, John, it's just left for me to thank you again, thank our viewers, wish you all happy holidays. I know it's a stressful time for so many, but we do hope that you have an opportunity to stay safe and at least enjoy some time with your friends and loved ones.